Let's get in Robert Parker, Senior Advisor, Credit Suisse, who now joins in on the show from London. Robert, thanks very much for joining in. If you could just walk us through what kind of earning estimates you have for the Indian terrain for FY14, because the bullish call says that a 15 to 16% is will be the view, and a bearish stance is 9 to 10%. What's your opinion?
I think if one looks at the next fiscal year, a reasonable forecast for Indian earnings is probably somewhere just into double digits. So I would say that, the figures you quote for the bulls of 15-16%, frankly, is far too optimistic. Now, having said that, if one compares earnings forecasts for India relative to the other BRIC markets, I think it's fair to say that earnings growth will be higher in India than the other BRICS. And, for example, both Russian and Brazilian earnings forecasts, I think, are going to struggle to be much above 5% growth. So, although I think the bulls are far too confident or over-optimistic, I do think India will have superior earnings growth relative to other emerging markets.
Robert, hi, morning. Tell us about what's your call on the currencies back. What is it that you're expecting on the rupee front?
Well, clearly the issue on the rupee is, can foreign capital flows support the rupee at a time when the current account deficit is still significant? And what is worrying about foreign capital flows at the moment is that if you look at long-term capital flows versus short-term or high-velocity capital flows, what has happened in the last 6 months is a reduction in long-term capital and therefore a greater reliance on more volatile, or what I call high-velocity short-term capital. And that implies that the scope for the rupee to rally sharply is very limited. At the moment, we are stuck in this range, really between 54 and 55. I'm assuming that we will get some pickup in long-term capital flows, but I think the probability of the rupee rallying back to previous levels of 52, 53 is now exceptionally low, and the risk is obviously that over the next 6 months that we break down into a new range and possibly test 56 to 57. So I think we're not going to see a major move, particularly since the rupee is cheap today relative to other Asian currencies except the yen. And let's not forget that the rupee has been, over the last 12 months, after the yen, the weakest Asian currency. So, it is somewhat undervalued, which is why I think the bias is going to be to very slight, moderate depreciation, and probably a range of 54 to 56, at worst 57, over the balance of this year.
We're taking a ride back to the earnings trajectory, and Infosys fell close to 18 to 20% post its earnings. Now, for a large cap stock to have such a price damage in a single day, that left many cautious about the Indian outsourcing story. What do you make of the numbers, or are some of the other players better when it comes to margins like TCS and HCL Technologies with a strong representation of that story?
I think the first point is that if you look globally, the IT sector obviously has a higher degree of volatility than other sectors, such as the consumer sector or the capital goods sector. I think the second point is that if one looks at Infosys, clearly market expectations were too positive prior to their earnings announcement on the sales outlook, and the guidance on sales has been revised down. So whereas expectations were that sales would grow well into double digits, those expectations on sales, revenue and margin have all been disappointed. So as a result, you have seen this very significant sell-off. In terms of the outsourcing story, I think that actually the growth outlook over the longer term is going to be less than what we have seen over the past 5 years. And there is actually quite a clear trend in companies, notably American companies, actually switching from offshore centers back either to the States or to markets such as Mexico, where costs are lower. I think actually one advantage for India, however, is that if you actually look at costs for outshoring, basically China is becoming much more expensive than India. So, in fact, if one makes a sort of competitive analysis between India and China, whereas 2 years ago, 3 years ago, China was clearly much more competitive as a manufacturing and service sector base, that competitiveness now has reversed to India's advantage.
Robert Parker, thanks very much for joining in with some perspective, in fact, on the India outsourcing story.